In this video, I'm going to walk you through a complete guide on how to set up an LLC in 2024 and the best strategies for paying yourself as a business owner. My name is Jesowshek, a certified public accountant and the owner of a tax technology company. I've helped thousands of entrepreneurs set up their businesses the right way. My team and I specialize in making complex tax and business structures simple and accessible so you can focus on growing your business. One of the biggest mistakes I see new business owners make is setting up their LLC without fully understanding the tax implications or how to effectively pay themselves. This can lead to costly errors and missed opportunities to save money. But that's exactly what I'm here to prevent. In this video, not only will I guide you through the LLC setup process step by step, but I'll also explain the best ways to structure your income so that you can maximize your financial benefits. So with that being said, let's dive right in. Now, the first step, what is an LLC? And an LLC is a business structure offering personal liability protection and flexible tax options. It is one of the most popular choices that we see small business owners make. Now, I will say, before we get into this LLC, right, we want to make sure that you have a legitimate business. If you are in the idea phase, like, I think I want to start a business, but I don't know what I want to do or how I want to do it, you don't need an LLC yet. But once you have that business set up, you have the plan, you know you're starting it, you have customers, you have activity, you know exactly what you're going to do, that's when we want to start to look at getting an LLC set up for that business. And what I always say is having a solid foundation for your business allows for both tax opportunities down the road and protection if something bad happens. It's important to take this part seriously because this can be a major change or a major impact in your business. So some of the steps of setting up an LLC include choosing a name, filing the articles of organization, creating an operating agreement, obtaining an EIN, doing maintenance on the LLC, tax planning for that LLC. And so those are all of our opportunities. And I want to give an example of a business owner that we worked with that had a good experience. You know, they set up an LLC right when their big business was getting started. They had a really good business that was growing, and they got to a certain point where they said, hey, I think we want to look at an S corporation to help minimize the amount that we pay in self-employment taxes. And because they had an LLC, they had that good structure set up, they could easily elect to do that S corp status, and the whole process went smooth for them because they had a solid foundation. Now we have other business owners that maybe start up as sole proprietorships and are just kind of in the weeds, growing their business, not even thinking about setting a foundation for their business. They see all this growth and high taxes, and then they're stuck because they don't have an LLC set up. They didn't build that foundation. So my goal, what you hear today, is that it encourages you to build that foundation, and why having a solid foundation in LLC is something that we recommend to most small businesses out there. So the first step here, step number 2, is choosing the name and state. So first you need to determine what state are you going to open it in? And you'll often see, if you look around the internet, you'll see open a LLC in Nevada or Wyoming or Delaware and all these different areas. But what I always tell people is open in the state that you're going to operate in. Because if you open a state that is not the state you're going to operate in, you have to file a foreign entity anyways in the state you're operating in. So you might hear on the internet, someone might say, well, go open up an LLC in Nevada because there's no state income taxes there. You might live in California, but go open it in Nevada, operate out of Nevada, and then you don't have to pay any state income taxes on that. That could not be further from the truth. If you have a business that is organized in a different state, but you are operating in another state, you need to file as a foreign entity in that state that you're operating. And that's why for vast majority of small business owners out there, you should just be starting your LLC in the state that you live in, the state that you operate in. So that's the first decision. What state are you going to do that? Once you've determined that, you need to think of a name for your LLC that is both available at that state level and compliant with whatever state you're organizing in. They might have name requirements. You just need to make sure that it is compliant in there. You know, we had a small business owner that set up an LLC in Nevada, and they did it because they read online that they don't have to pay income taxes on it, but they were operating out of Wisconsin. And so they were filing for years, and they're like, well, my accountant said I don't need to file any of this business income in the state of Wisconsin because it's a Nevada LLC. Well, next thing you know, Wisconsin's knocking and saying, hey, you have employees, you're operating, you live, everything in this business is happening in Wisconsin, but you're not paying taxes in Wisconsin. They said, well, because the LLC is organized in Nevada. I said, we don't care. You're operating in Wisconsin, you need to file as a foreign entity in Wisconsin, which means filings in both Nevada and Wisconsin. You're paying the fee in both Nevada and Wisconsin, more filings, more costs, more taxes. So what I always say is open up the entity in the state that you operate in, the state that you live in. The next step, you need to file the articles of organization. And so the articles of organization is something you file with your state business filing office. This is what legally registers that entity with the state and makes it official. You know, this is filing those docs with the state to say, yes, this is an LLC. The state creates the articles of organization, which then says, okay, we have an entity set up at the state level. Without this, you don't have an LLC. So you could just name your business LLC, but you don't have an LLC without any kind of articles of organization. You need to organize this at the state level. Now, oftentimes times we see small business owners work with an attorney to do this kind of filing, making sure that they're dotting their I's, crossing their T's on that filing. Now, once you have that articles of organization done, you need to create an operating agreement. And an operating agreement basically just outlines the ownership and operating procedures for your LLC. It prevents conflicts among members down the road, provides a clear structure for how your business is going to operate. And again, we typically recommend getting an operating agreement written by an attorney that can understand your situation, who's the ownership, how's it work, what happens when you want to exit it, what happens in all these different situations. That's all going to be outlined in the operating agreement. And I'll give you a good example. We had a client that was a software company with partners that ended up being just an awful fit. All great people, but they just cannot work together. And their operating agreement that they had gave explicit steps for moving forward, what they needed to do, how they needed to do it to basically disband from that partnership, that agreement, that company that they had together. Whereas in another case, a member of Taxome that had no operating agreement, their partnership blew up, and what they ended up doing is they actually walked away from this partnership. They put all this money, effort, sweat into it, but they just walked away because they had no structure set up. They didn't want to deal with the headache of it. One partner was suing them, and there was a big mess. And they said, you know what? I'm going to take my losses. I'm going to move forward. That was an expensive lesson that client learned. So create an operating agreement that's going to protect you. Think of the things, everything is great when you first start an agreement, when you first start an entity, but think of the things that are going to happen down the road and how is this entity going to handle that. Once you have the articles of organization, you have the operating agreement, you want to go obtain an EIN. And an EIN is kind of a unique identifier for your LLC. So it's similar to like a social security number for an individual. An EIN is for your LLC. And it's required for tax purposes. You need it if you want to open up a bank account. If you need to hire employees, you're going to need an EIN. And so without it, you can't literally operate your business very well. And so the process for getting an EIN is very simple. You visit the IRS website, fill out the EIN application right on their website, submit that form, and you usually will receive your EIN immediately. It'll come via a download, and then you have your EIN. So that's some of the basic steps to get it up. Pick your state, file articles of organization, create an operating agreement, get an EIN. But it doesn't stop there. Maintaining your LLC is the next step. Setting up your LLC, that's just the beginning. You need to maintain it to stay compliant with the state and federal regulations. So regular maintenance ensures that your LLC remains in good standing and avoids kind of penalties. And also, it's going to be super important to have a maintained LLC in the event of a lawsuit. So some of the things that help maintain your LLC is filing the annual reports with the state. And if you're operating as a foreign entity in another state, you need to file the annual reports with that state. You need to pay any required state fees that may be out there. You want to have accurate financial records. You want to hold annual meetings. Basically, you want to make sure that this entity structure is operating the way it should be. And that is part of that maintenance piece. This is a key piece. You can't just set up an LLC and forget about it. You need to maintain that entity, and that's what creates that protection that we so love LLCs for. Now, the next step that comes up is people say, well, how do I pay myself out of your business? And this can get very confusing. So now that you have your LLC set up, let's talk about that. How do you pay yourself? Paying yourself correctly is very important for tax purposes, maintaining that kind of legal structure of your business, because improper payments can lead to tax issues, can lead to legal issues, can really cause problems down the road. So how you pay yourself is going to depend about how the business is organized. So if it's a single member LLC, you are the only owner of that LLC, you're just going to take owner draws from the business. Basically, you move money from the business account to your personal account. Owner draws. That's it. That's how you operate as a single member LLC. You do not pay yourself a W-2 payroll because that's not allowed by law. You don't do any kind of other funny business. You take money from the business bank account to your personal bank account, and that's considered an owner's draw. This is not an expense to the business. It's an owner's draw. And then you're going to report that business activity on your Schedule C of your personal tax return. Now, if you're operating as a multi-member LLC, this would be a partnership. You're going to distribute your profits. Same thing. Make distributions or guaranteed payments from the business bank account to your personal bank account. And that distribution is going to be made accordingly to the operating agreement that you have. And then you're going to get a K-1 at year end that reports all that income from that business, all that activity, that you're going to report it on your personal tax return. Now, the final thing we want to talk about is an LLC tax as an S corporation, which a lot of people will get to that point. We typically say once your business starts to profit around $50,000 or more, we're going to want to look at a potential S corp election for that LLC. And an S corp is just an election. We're taking that LLC that you already have at the state and we're electing for that LLC to be taxed as an S corp at the federal level. And that with an S corporation, you're paying yourself a reasonable salary. So there's two forms of payments in an S corp. You're required to pay yourself as an owner W-2 payroll. With an S corp election, you have to pay yourself a reasonable salary for the work you're doing. But then any payments over and above that, over and above the reasonable salary, you're going to take as an owner's distribution or an owner's draw. Same way, transfer money from the business account to your personal account. And the S corporation can be a great way to minimize the amount that you pay in self-employment taxes. So that's this piece of paying yourself. We need to make sure we're doing that correctly. The final step is using the LLC for strategic planning purposes. Essentially, I say, if you have an LLC set up, we want to make sure we're keeping active income separate from passive income. So if you're operating a business, let's say you're running a consulting firm, that's going to be considered active income. But let's say then you also have this rental property that you just receive income, you get your check in the mail, and that's all you're doing with this rental property. We do not want to marry those two in the same LLC. We want to make sure we have an LLC for our operating, active type activities, and a separate LLC for any kind of passive type income. Think of things like rental properties. We also want to encourage you, this part of strategic planning is thinking about an S corporation. We want to think about an S corporation when the time makes sense, because if you're set up as an LLC, a single member LLC, you can pay self-employment taxes over and above your regular income tax rate, but you pay self-employment taxes of 15.3% on 100% of your profit. Now, if we elect that same LLC, still remains the same LLC at the state level, we're just electing for that LLC to be taxed as an S corporation, we can split your profit into two pieces. A salary, that salary portion, we are going to pay self-employment taxes on. It's not called that, but it's essentially the same thing, but we avoid self-employment taxes on the remaining amount. So let's say that you have an LLC that's profiting $100,000 a year. If you're set up as a single member LLC, you're going to pay your normal income tax rate on that $100,000 plus roughly $15,000 in self-employment taxes. But now let's say you take that same LLC and you elect for it to be taxed as an S corporation. Let's just say for this S corporation, $45,000 is a reasonable salary for the work that you're doing. You're going to pay self-employment taxes on $45,000, but you're going to avoid self-employment taxes of 15% on the remaining $55,000. That's the power behind an S corporation, how we can take an LLC that we set up correctly, that we built as our foundation, and elect for it to be taxed as an S corporation. The other thing we want to talk about is oftentimes this S corp makes sense when we talk about $50,000 or more in profit. If you're in a partnership, one of the best setups that we often see is that you have an LLC that's a partnership, and the partners, the owners of that partnership, are going to be individual LLCs that are S corporations to each of you as the owner. And we did some training and planning on this. Within Taxon, we have a ton of information about the best setup to structure when you have partners. The same thing goes for operating. If you have multiple operating businesses, we want to make sure that we structure those correctly. And we talk about that in Tax Elm a lot too. So with an S Corp or with an LLC, there's a lot of step phases. First, we want to understand what is an LLC and when does it make sense to become one. Once we said yes, it makes sense. We need to choose a name for it and which state we're going to open up in. We're then going to file the articles of organization. We're going to create an operating agreement. We're going to obtain an employee identification number, an EIN, and then we need to maintain that LLC. When it comes to paying yourself, how do you pay yourself from an LLC? Well, if it's just a single member LLC, no S Corp election, you're just going to take money from the business bank account, transfer it to your personal bank account, and that's considered an owner's draw. Now, this is not an expense to the business. It does not reduce profit, but it's considered an owner's draw. If you're a multi-member LLC, a partnership LLC where individuals are the owners, then you're going to distribute money, same thing. Transfer money from the business bank account to the personal bank account. You might have guaranteed payments in there. And if you're an LLC that elected to be taxed as an S corporation, you need to pay yourself a reasonable salary, and then any profit or income over and above that reasonable salary, you're going to take as a distribution. And then the final step to kind of put a bow on all of this is using that LLC for strategic planning purposes. Make sure you don't mix active businesses with passive businesses in the same LLC. We don't want to do that. We want to be thinking about an S corporation when it makes sense for our business. Once we're starting to hit profit of $50,000 or more, we want to be thinking about an S corporation. If we're in a partnership, we might want to look at how do we structure this to be the most tax efficient way to save the most money on taxes as well as make it the easiest to understand. And if we have multiple operating businesses, how do we make sure that that is done the most effective? Now you know exactly how you can set up an LLC and start paying yourself. You can now shift your focus away from complex and scary tax and business structure implications and begin to focus on truly growing your business. What we see at my company every day is that when people try and implement these steps solely by themselves with no help, they always end up making mistakes that cost them thousands of dollars. So if you are serious about your business success and want to make sure you are set up in the best possible way to avoid taxes and succeed as a business, click the first link in the description. It will take you to a page where you can sign up for our tax technology software that will allow you to be taken by hand, step by step, implementing these strategies and so many more so that you can save thousands of dollars every single year.